Hi, good afternoon everyone. This is an FX technical stream. Now we will be doing these every Monday, Wednesdays and Fridays going forward, and I will be having a regular slot on a Monday every 2 weeks. So twice a month I'll be doing some analysis of the FX markets as well as some of the commodities markets. So today what we're going to be looking at is the Euro USD, cable, the Aussie dollar, as well as the Japanese yen. What I wanted to do first is kick off with the Euro USD, and we've had quite an interesting morning. Firstly, in the bonds and equity space, some strong bank holiday moves in the morning, especially in the Bund as we go south to challenge that 155.80 80 region, 80 zone, and the equity markets we have found a bit of a bid. But with the Euro USD, I did an analysis in March sometimes, in the first week of March. If you go into the Traders Corner section of the FutexLive website and you go to the setup section under technical analysis, if you just go and review that video again, and I was looking at it when the Euro USD was trading around the 104.70. Over here on this, if I just expand this for you, when we finished the week trading at just below 105 the figure, and the video was done on a Saturday night, and if I just summarize it quickly for you, what we're looking at is that we're in this slightly downward sloping trend channel, and this critical line where it touched two previous points, and then on that Friday or Sunday night in the Asian session touched the point for the third time. But what was rather important was each time it touched these critical levels after a significant sell-off, and I'm talking about a sell-off of in excess of 20%. The relative strength index was below the key 30 area. So you can see when we touched it over there, it was below 30, the back end of 2008. Then again in 2010. As you can see, below the 30, and then over here during the 2014, 2015, more importantly, so when it touched this line again, then it was trading below the 30 mark. And each time after about a 20% sell-off, there was a fairly significant bounce, really powerful bounce, but this was in the back of exceptional circumstances during the financial crisis, and then over here 2010 leading into the Greek crisis. Now we have found on the weekly chart some overhead resistance. The first time we've hit the 20-day moving average since really the middle part of 2014 when he started trading below it. So that's your first little area of resistance. But now what I would like to show you, and important, and I'm going to get rather funky with my chart over here, is since the inception of the crisis that we've had. And so I spoke to a friend of mine. She's a really seasoned pro, been training for about 30 years, and she talks about more long-term type of plays and trades. And I know most of us are intraday traders, which we're going to look at some intraday levels in a moment. But there's certain plays, such as when the sterling hits 2, it's against the dollar, is usually a sell, and when it hits 1 is usually a buy. When the Aussie Kiwi hits 1 or parity, that's usually a buy of the Aussie against the Kiwi. And now that the euro has almost trading near parity, what I want to do is, since the inception of the euro, is just do a regression line. Now it's not a tool that I use too often, but I do use it when we had when the market's at key cycle highs and low, key long-term cycle highs and low. And what this is it plots the median line from the time that you execute the tool to the current period, and this median line over here shows where on average since 1999, so the last 16 years, where the median price value of the Euro USD is. And we hit, and then either side of that median line you can see this green dotted line, that's 2 standard deviations above the median line, and the red line is 2 standard deviations below. So really just critical inflection zones, as you're saying. You can see for a good part of 10 years we traded above this median line, and now we're trading below it, and we've been trading below it really consistently from 2012, just after the European crisis. And we just so it's almost a confluence of levels, not only that level where it hit the RSI below 30 and also this trend line, but also a significant long-term regression where it hits where it's really just breached that 2 standard deviations below. And you can see when we hit 2 standard deviations above, it spent a good, almost a good year just rotating around this area before it traded the other way. So just keep an eye. This is more a longer term play in the Euro USD. Now, something that's also fairly important in this space, and it goes, if I just bring a couple of charts across for you. Now, this all links up to the Euro USD, so just be patient with me whilst I explain a few things. Now, last week I was trading the yen on the wait for the Bank of Japan, and I was looking, the Bank of Japan weren't going to do anything. I thought we had a technical boundary on the Japanese yen to really start breaching towards the downside, as we also had some risk-off plays in the equity markets, and I felt the yen really was a bit lagging on the risk front. Well, I personally sold the absolute low of this move, and I paid up fairly quickly, about 60 ticks, and I was fairly on the back of this trade. It really got me thinking over the weekend just about the changing themes of which assets are described as risk-on assets and which assets in the FX space are risk-off assets. Now you can see that the Swissy, another barometer for risk-off, risk-on flows within the currency space. When the Swissy strengthens along with the Japanese yen, as in the past, you generally get risk-off flows across the markets. Well, we had the Swissy strengthening when it went beyond and it breached this boundary, but again the yen never did. So over the weekend I started looking at the euro. Now I do know, amongst many of the Futex traders, and it's been we've all been speaking about it for a good over a year, 2 years now, with regards to the ECB engaging the QE and having currently the most aggressive monetary policy dovish regime, that potentially the Euro USD is now the new critical funding currency and possibly the new barometer for risk on or risk off asset flows. And what I want to show you over here is that this week, so this is above here, what we have is the DAX, okay, and here you have the DAX finding a peak back in March, in the middle part of March, and that's when the euro found its low. Then again, when we found another peak in the back end of April, the euro found another low over here. So if you just correspond these levels, and then when we've had this move up in the euro, then the DAX took a couple of more days and then it followed suit. So really important from a, could the Euro USD replace the Japanese yen as a barometer for risk on and risk off flows? So it's just an idea and just something worth keeping an eye on going forward. And you generally start noticing this change in these relationships, because I lean personally a lot on different correlated markets to put, say, a play in the equity markets or in the bond markets. And really it was very noticeable after the Bank of Japan meeting how maybe the Japanese yen is not as much as a barometer as we have in potentially in the Euro USD going forward. So just keep an eye out for that relationship. Now, what I want to look at is that we do have, all important, the British elections this week, and the last time we had the elections was back in 2010 and in May, and you can see on the day of the election, I think it was the 6th of May, we had a fairly powerful move in the GBP USD, and you can see we sold up around 151, just 151 the figure, and over 2 days we reached 145, so a good 600 tick move. Now that was on the back of a hung parliament, and there was no outright majority. But what was quite interesting on this chart setup was that we actually had quite an interesting formation where we had multiple lows tested. So 1, 2, 3, 4, 5. So you had the technical backdrop with the fundamental news coming out to really provide the impetus for a move. And that to me is when you have almost a perfect storm, or the technicals aligning with the fundamental landscape. But now if we look currently, well, we've had some significant weakness in the sterling the last 2 days, and but with regards to a technical backdrop, there's nothing very interesting for me at the moment. So a hung parliament, is that something really new? I know it's all expected, but do also remember the hung parliament, although it's happened in UK for the first time, back in 2010, I don't know in how long or if ever, but it's quite a regular regime, a political regime in the whole of Europe. So it's nothing quite special, and it doesn't really mean anything for the broader economy. A couple of new policies potentially that can affect the flow of risk, but overall not really too sure. So just keep that in mind. Now what I want to do is just look at a few of the futures, because that's what we trade. We trade in the future space, and looking at a few of the currencies at the moment. So what I'll do first is I'll have a look at the Euro futures, and what I'm doing, I'm just going to look at purely from a volume profile perspective, and the first key level that I'll be looking at is the 110.80 area. You can see we formed this really nicely rounded, well distributed volume profile over here, and 110.80 is a fairly low volume node, coincides with these two previous swing lows, and this is on the 60-minute chart. So key area for the Euro USD bulls to really try and hold, because if we start trading below this 110.80 area, well then it really starts opening the downside to start challenging these previous peaks, and then your key line in the stand for the Euro USD bulls and holding those long-term that long-term trend line that I was showing you a little bit earlier on is this 107.40. You can see a key area of interest within the volume profile, and this key area, this 107.40, coincides with all these previous swing lows. Swing lows over here, swing low right there. So you can see it's quite an important inflection zone. Also, you go back as far, this entire month, an important area of exchange. But first, the immediate area of support at the moment is 110.80, and as the euro has been weakening, this morning, so has the equity markets found a bid, as well as in the American markets. So keep an eye on the Euro USD. Then looking at the British pound in the futures market, also at a key area. Now we've really had in the dollar space this morning, the main the British pound and the euro have been hit this morning, whereas the New Zealand dollar, the Japanese yen, the Kiwi, they haven't been hit as hard, and I think they've actually slightly strengthened against the US dollar. But we're at also this important zone, this really key area of volume interest over here, and another low volume low, just below 151 the figure, so around 150.80 to around 151 the figure. So key area here, and if the market continues to exchange some value here, and this volume profile continues to extend itself out, well, if the market does find support and it starts charging towards the upside, well then we have a lot of volume area to start repairing, and because we also have this vacuum. So this is quite key on the British pound, and a key swing high over here for the sterling bears is to really to hold this 151.70 area. But if we do start struggling to really trade any lower, and we do start trading higher, and we breach that, well, I see a fairly quick and swift move up to 153 the figure. So keep an eye on those levels in the GBP USD. Now another key important currency for this week and critical risk event is the Aussie dollar. Now the Aussie dollar, I think Brannigan last week brought out an article in one of his debriefs on an article that was leaked to the markets of a rate cut happening this week on Tuesday during the Reserve Bank of Australia's interest rate decision, and we had a very powerful move towards the downside. Now what's really interesting, the last time the RBA cut rates, there was also a leak of a paper 5 days prior to the RBA meeting. So we're having a bit of a pattern develop. I mean, 5 days before this RBA meeting, we had a different paper, but it could have been the same source, leak the news. And then we also had in the February rate meeting 5 days prior. Now, if they do cut rates, along with the article that came out, now that it's fairly baked in, and the last I saw was about a 70% chance of a rate cut, a critical area of support is going to come in at the 77.50 region. Really important zone here, because if they do cut, and it's pretty much almost expected, and if we can't pierce this 77.50 area, and it coincides with all these previous swing lows, so it's an important area of support, well then we could just start snapping back and really just start rotating between the 79, the figure, and the 77.50. But any pierce below the 77.50, well, we don't really have much stopping this market, well, to where we broke out, where we had this type of this bottoming formation before we launched towards the upside, and that comes around 76 the figure. So 77.50 is my key line in the sand for the Australian dollar, and I really want to start observing how this market trades towards this side. So that's the Aussie dollar. So I did speak about the Japanese yen, and just wanted to say to you guys, good luck for the rest of the trading day. We've had some really good volatility today. For the guys who have been doing well the last week and a bit, continue to be focused, continue to sustain that level of excellence. The younger guys who maybe haven't done as well in the markets over the last week because you're not used to these newfound levels of volatility, well, what you should do is be printing all your charts at the end of the day, going home and figure out how you could have traded a lot better, because that's the only way you're going to get to a level of excellence where you can improve your game every single day. So great markets to trade, but also great markets to learn from if you haven't experienced these types of levels of volatility before, especially in the bond space, which is really happy hunting ground. Okay.